I had to look down for your title because you've got a new title now. First time joining us since the promotion. So first of all, congratulations on that.
Thank you, thank you.
And I know when that announcement was made, you made a very clear statement. Look, we're going to scale up this business. It's an interesting time in this industry. There's concerns about can you exit, concerns about higher for longer. So why is now the time to scale up private equity at Brookfield?
Well, first of all, thank you for having me back. I'm very fortunate because I've stepped into this role at a time where our private equity group is at a true inflection point at Brookfield. And I genuinely think we can triple the size of this business in the next 5 years. We have everything in place. We've got the best team we've ever had. We have real boots on the ground, operational capability in every market in the world that we invest in. An incredible track record. We've been doing this for 25 years. So I'm very fortunate to step into this sort of opportunity at a time when we've got this platform that I can hopefully help grow and steer into the right direction.
So just to make sure I heard you right, triple in 5 years.
That's right.
What leads that?
You know, it's funny. Of course, the deal environment is not as exuberant as it was in 2021 or 2020. But activity's back. Good sponsors that are buying good businesses to generate cash flow, ones that have sort of an angle to bring a real operational capability to the businesses that they own. They can get financing, and that financing is enabling a deal environment where transactions are happening. We think that it's back to roll up your sleeves private equity, and you really have to get into a business and improve the margins rather than relying on multiple expansion to generate your returns.
Right, the financial engineering part of it being over. Well, so that's kind of the deal structure, but what about region? Is there a specific region you're leaning into?
So we've always been very big in North America and Western Europe. Those continue to be two key regions for us. In the rest of the world, India and the Middle East has always been very important. We continue to find great opportunities there, in Australia. But we're seeing opportunities around the world. The United States is quite interesting because it's been very resilient. Our businesses are performing very well, even in the last 12 months. Market leaders continue to be able to set pricing and to be able to pass through inflation and handle this environment quite well. So we're going to continue to focus on the core things that we do, which are industrials and essential services in the United States and Western Europe.
When it comes to industrials, though, I mean, again, it's, you know, the companies that Brookfield traditionally invest in, but they tend to be capital heavy, and we're at a time when growth is compressed. Is the macro environment becoming more challenging for industrials?
You know, I'd say it's becoming more rational, and it's becoming, you know, I'm actually glad that some of the exuberance is gone. I think it's a healthy market. Financing is available. We've financed almost $20 billion of debt refinanced in our portfolio companies at often the same cost or less than what we had before. So you can get great financing for great businesses, again, if you're a great owner of that business. So, you know, I think that this environment's actually quite healthy. Industrial companies, if they are market leaders, they provide an essential product or service, they can still thrive in this environment. And, you know, again, it comes back to really going into these businesses, rolling up your sleeves, and relying on margin expansion, not multiple expansion, to make your returns. And I think even at this conference, that's, I think, a realization across the industry.
The other thing, though, that's been talked about this conference is, sure, there are deals to be done, there's some attractive things out here, but the selling isn't happening. The selling is still at a standstill. LPs are not happy about that, especially as you're extending the business. Do you have to have a clear view with exits? How do you handle this conundrum?
Look, we always say if you're not selling a business at a certain price, you're buying it at that price. And that might be okay for a great business that has a lot of runway ahead, but you have to constantly be thinking about exits. We think about exit from the time we make an investment.
Right.
And as the largest LP in our funds ourselves, as Brookfield, from the balance sheet, we really care about that DPI or that return to our partners as well. And so that focus is throughout the business. We've actually managed to make quite a few exits in the last 12 months, notwithstanding this current environment. We sold a business in Europe to a strategic. We sold a business in Asia to another sponsor. And of course, we had a big exit of a large business in the US, which again was sold to a strategic. So there are exits happening. I think it's about the types of businesses. These are high cash yielding, really market-leading businesses that people want.
But there's some stuff out there that this industry has done, especially when there was that period of time where rates were low, that everything was bought at high multiples. Anuj, there's things out there that are not quality companies.
Absolutely.
When do those get sold, and what does it look like when they do?
It's thankfully I don't think we own any of those, so I think we're not in that challenge. But there are people that depended on a low rate environment to get exits. And I don't think that low rate environment's coming back anytime soon. I think rates will probably come down from here, but we are in this environment for some time. I think that's a good thing. Some of the businesses that relied too much on unprofitable growth are going to have challenges getting exits, frankly, at any price, at any time in this environment.
Anuj, I want to end here because you have global experience. Brookfield has led you all over the place. You've started up many businesses. And I know you were in the Middle East for a while. The Middle East is obviously, and the sovereign wealth funds, has been a very fertile ground for fundraising. There does seem to be this concern, though, that if you look at the PIF, for example, that they want to start spending more internally. They have a lot of projects they want to put money towards. Do you think some of the fundraising slows down from some of the Middle Eastern sovereign wealth funds as they look internally?
Look, I think it's all relative. I think the Middle East has been a huge supporter of the industry and provided a lot of capital globally over the last decade, and they will continue to. They will continue to be a big supporter of ours, and I think of the industry. They do have a focus also on investing in the country. We've been investing in the country for 10 years. We've done about $10 billion of deals in the Middle East. And in fact, we're really excited about that market. We think it's been very, very valuable for us. It's been great returns. We think of it as kind of emerging market returns with developed market risk. And so we'll keep investing locally, and some of them will partner with us.
What's competition
in that
gotten
region.
like there, though? Because when you started there weren't a lot of players there. There was a recent story on Bloomberg, our colleagues writing that Chinese investors are also increasingly getting interested in the Middle East.
Absolutely. Look, Asia and Middle East broader are all interested in that region. We're seeing, though, that a lot of them want to actually partner with us because not everyone has the boots on the ground. And it comes back to that operational capability. We've been in the Middle East since '97, been an active investor since 2015. We got a big operating capability locally. We don't invest in the region from London or from another market. We invest from that market. And hopefully all this capital that wants access to it will find partners like us valuable.